the name of the values that keep you alive, do not let your vision of man be distorted by the ugly, the cowardly, the mindless, and those who have never achieved his title. Do not lose your knowledge that man's proper estate is an upright posture, an intransigent mind, and a step that travels on limited roads. Do not let your fire go out. Spark might replace the spark, and the hopeless swamps of the approximate, the not quite, the not yet, the not at all. The world you desired can be won. It exists. It is real. It is possible. It's yours.
Hey guys, welcome back to the Cryptoconomy podcast. I'm here with Joseph Kelly of Unchained Capital. Thanks so much for being here, Joseph.
Thanks, Mark. Glad to be here.
So, Joseph is here to talk a little bit about crypto as collateral. So, Joseph, if really briefly before we get into your company, Unchained Capital, if you could go into how you got there, what your background is, some of the other companies that I know you've started in the past, just to lead people into how you got where you are today.
Sure. So I'm primarily driven by learning, and my mind just likes to go where there's kind of more facts to uncover, more ways to learn how the world works. And um, my for kind of first, I guess, big professional project around that was a company I started with two co-founders called Infochimps. We got started in 2008 or so. The early idea was to be a data marketplace, a place you could find all kinds of data about the world. We had at our peak about 15,000 or so data sets covering everything from census data to weather data to stock prices and sports scores and things like that. And so, at the time, I just really believed in, still do, that data is just a important aspect of our economy, and our ability to understand data, use it within our jobs, and how we make decisions is kind of a key skill and asset. So, in trying to build a service and develop a company along those lines was really the early thesis. We really struggled building a content business. It was early in the kind of big data wave, big data hype cycle maybe, and not everyone was really equipped to even handle their own data, and that's something we kind of learned about halfway through. So we
Yeah.
pivoted the business and decided to help people with their own data, and that meant we took our technology, took what we built to host that data marketplace, and we provided that to large Fortune 500 companies like a State Farm Insurance or Cisco and folks like that who had big analytics projects they needed to deploy, and they needed good infrastructure to put that on. So we were the company for that. We sold that business to Computer Sciences Corporation in 2013. I like to joke that for the first time in my life, I had a little bit of money I felt I could afford to lose, and
Yeah.
so bought some Bitcoin with that. um,
Well, there you go.
yeah, and
Good
that's
time
kind
to
of
buy.
sure. It ended up, in hindsight, there's looked really smart there for a few months, and then you look kind of dumb, but
Yeah.
it really wasn't in it so much for the money as just what there is to kind of learn here is, I think, Bitcoin and blockchains are a really interesting lens from which to learn about the world, learn about how markets work, and how financial transactions, how our economy has kind of grown, and how much happens in the background that we don't even know, whether it's central bankers or how loans and lending works, and various capital flows, to kind of learn about this stuff through this new technology as a lens has been a lot more interesting and fun, I think, than just trying to learn about it on its own.
So, looking at InfoChimps through the lens of blockchain, is there anything you think you could have done with data to make it more secure? I know you talked, or at least I think I read on one of your co-founders' LinkedIn's that you might have handled some things like voter data. And obviously, that's something a lot of people are talking about as far as security. So, are there any lessons you think could be learned from handling data as far as making it more secure, making people feel more comfortable with giving companies their data?
Yeah, I think I'm not too familiar with a lot of the implementations of folks kind of trying these data marketplaces in the blockchain arena, but I think there's something for us. It's always really important to have good provenance with whatever data you're working with. You want to know that it's trustworthy, and if you can know down to whatever sensor collected that piece of information for every row of data maybe you're looking at, that's really useful. Things like census data and data. It's again this problem of you're usually trusting that some third party did a good enough job preparing it and making it high quality. And so usually the reasons you're trusting a data source is because of just somebody's reputation. So there's some kind of interesting analogies there between how financial intermediaries act and are potentially disrupted within the kind of public blockchain ecosystem. So, but what would we do differently? I'm not really sure. I'm not sure I could have an answer for that at the top of my head.
Yeah, just thought, it's interesting that you've sort of been through all these different sectors, and I'm sure each time you learn a little bit about something that might help, along the line later for some of these other companies. So, how did you sort of come up with the idea for Unchained Capital, and what was the problem that you saw that you were trying to solve?
So yeah, as I mentioned, first really bought in 2013 some Bitcoin, and really just kind of held on to the stuff. One of my co-founders from Infochimps, he and I knew we wanted to work together on something else, and so when it came to looking at what kind of projects to start, we wanted to go again where kind of curiosity took us. So we knew Bitcoin and blockchain was high on that list, but when it came to what we did with our Bitcoin, we didn't do much, and we thought that we probably weren't alone in that respect. And at least there, after that kind of crash in early 2014, as Bitcoin's only trading at a few $100s,
Yeah, yeah.
there's a long kind of flat period there where we thought, geez, wouldn't you like to still get some value out of this stuff? We think it's going to be worth a lot more someday. So it'd be silly just to sell, just in case for some other kind of purpose or use of the stuff. So what are ways we can kind of have our cake and eat it too? And as we thought about it, we thought we probably weren't alone. So we started interviewing customers, potential customers, and figuring out what are they doing with their Bitcoin. Turns out they're not much, many on the same boat. And then you can
Yeah.
also download the public blockchain and see and analyze it for yourself and say, well, how much Bitcoin actually moves? What are people doing with their Bitcoin? And at the time, and really up until last year's kind of frenzy, pretty definitively you could say there was about 60% of all Bitcoin hadn't moved in 12 months or more. And so that's a sizable fraction. Even at then,
Yeah.
those as Bitcoin's market cap was only maybe $8 or so, that's still many billions of dollars worldwide. It's like digital mattress money. People are just sitting on it. So we thought there ought to be some way for folks to leverage it and use it. And certainly it was going to take a lot more time before traditional financial institutions did something about that. So we thought that was an opportunity for us.
Yeah, I really enjoyed your article about all the lost Bitcoin that's probably sitting around trying to figure out what the actual supply is, because you hear stories all the time about some guy whose wife threw away his desktop with, a couple million on it and it's in some dump somewhere. So it's interesting to think about how, the supply might be affecting value, but also how many people really aren't more specifically transacting with Bitcoin as much as with some of the other coins coming forward. So do you think Bitcoin is going to be held more like gold, more like sort of the standard asset class that you want to be holding if, you're just trying to sit on something for a long time? And is that why you guys have focused more on Bitcoin specifically?
Yeah, I mean we focus on it because it's the market leader. It's got the biggest market cap and in most broadest base of holders. Our customer base and our product is limited to people who already have cryptocurrency, and ideally you have a lot of it, at
Yeah.
least in terms of an ideal customer for us. And so that really means if we're talking about a coin with only $100 million market cap and less than $1 million a day liquidity, that's just not a good market or not a good asset for us to play in. That there's not enough there to justify the marketing and effort to support it.
So, who is your ideal client? Are these people who, have many millions of dollars and they've just got, 20% or something of their portfolio in crypto? Or some of them maybe, one thing that came to mind for me was ICOs. So, ICOs typically are raising a lot of money in Ether or Bitcoin and then they're just sitting on it. A lot of the ICOs we've talked to, they're losing 20% of the amount of capital that they have on any given day, and a lot of times they're just sitting on it. So, are you moving more towards ICOs, or it's really just private investors at this point?
I'd say generally the bulk of our clients are long-term holders. They've held for maybe a number of years. They have a very low cost basis. That means if they decide to sell, there's a significant tax event that they'd be looking at, and so utilizing us can kind of be one way to perhaps manage that burden better and have an alternative to selling. We do see definitely some businesses and institutions have some crypto funds that come through. ICOs we've talked to, we haven't worked with too many yet. Just have had, I'd say probably one that we've at least done something with. But with ICOs that, unlike maybe individuals or other folks that have a business that earns money, ICOs aren't earning dollars. They're not having USD come in necessarily that they'd be using to make interest payments with regularly. So if they were to establish a loan with us, they'd need to be selling constantly parts of their treasury to pay interest payments. And so I think that can sometimes be a logical choice depending on the situation. It's yet to be seen whether a good majority of ICOs would really still want to leverage a solution like this.
So when you talk about interest payments, so I guess they're all made in USD, and in the case of your interest payments, how do they compare to the alternatives that these people might have as far as rates?
I think we're generally pretty competitive, and we're one big use case where we do see a lot of overlap and parity on rates in certain cases is in commercial real estate. A lot of folks are leveraging their Bitcoin to get some cash that they'll then use to purchase real estate, either for flipping or perhaps for a first home, or any number of reasons why they'd want to buy some property, and accepting first home mortgages where it's the owner-occupied residence where you can see interest rates these days and at those like 4 and 5 and 6%. Usually if it's a second property or a commercial use property, now your rates start to be in the teens, and that tends to be where our interest rates are in that kind of 12 to 14% annual percentage rate type range. So that there's a lot of good comparison there and crossover. Some folks sometimes with really excellent credit, you can get loans from online sources for less than 10%. So that's not always as competitive, but many times those outfits limit you to maybe $50,000 at a time or per loan or at any given time or that kind of a thing. Well, we can do substantially more than that through a secured loan. So we do see the rates going down over time. They're just kind of where they are right now because that's this is a new asset class. Not all the capital providers and folks we talk to finance these loans are comfortable with Bitcoin yet. They just don't treat it like a full asset maybe that we do and believe in it to be. So that they're kind of demanding these higher rates of return. But I think that'll come down over time. A big comparison of things like the securities lending industry, a big industry that has many billions of dollars of loans outstanding against stocks and bonds. And in those industries, and this isn't even just talking about margin loans or loans that you get leveraged to trade with. These are still loans that you're using to buy a house or make an investment or something outside of buying more securities. And those interest rates are definitely below 10%, sometimes as low as 2 or 3%. And so we see that over time, we think the market's going to shift that way. Doubtful it's this year, probably not even next year, but over time, as and if the kind of crypto industry maintains daily liquidity and all the good things it has going in the public ecosystem, you'll see rates come down like that, we believe.
So you're holding the crypto as collateral essentially. So, if you take out a car loan, they're gonna essentially own the title to your car. So do you guys own the rights to the crypto at that point if they default? And how is the process, I guess, the regulatory framework for making that all happen? Was it far more difficult than typical lending? Did you run into a lot of problems, or are you just sort of treating it like any other asset class and it's been pretty okay as a result?
So yeah, it's definitely one of the kind of interesting rabbit holes to go down as you want to take what's called a security interest in some new form of asset. It's actually interesting. I've really wanted to find a history on how car loans started because while we do get to have the great idea now of you get a car loan and now the title is either in the bank's name or the bank has some lien on the title and that's kind of registered with the state. That didn't exist when there weren't cars, then there weren't car titles. So, to kind of have the idea that had to come about at some point, and that was probably also a supremely enabling lubricant to the idea of financing cars and making car loans possible. It's kind of probably an interesting part of financial history. But the way those things work are that each state has a code or set of statutes that dictate how these security interests are registered and what makes them valid. And depending on the type of asset that you're interested in getting a lien on, you're going to be following a procedure, one or the other, in order to get that lien. it's a home, it's really straightforward. If it's a auto, title, it's pretty straightforward. Those have their own sections. But then you have the section called for things that are called general intangibles, and that kind of grab all bucket are things like royalty rights or patents or things you can't always kind of quite put your hand on. And so it's still an open question. There's not a lot of rulings or case history on whether Bitcoin is in this asset class or according to the UCC, or whether it might be in consider something that's like a financial instrument, more like a stock or bond, which has its own lien registering system. So within just considering that's a general intangible, which has been the kind of more general opinion that we found across most attorneys we've talked to, that's in order to get that security interest, you can have it in some ways through having just control of the asset, which we do in effect today, and then as well you can have it through filing a UCC1 filing, which is just a filing with the Secretary of State that says, hey, for this borrower or this person, this property that I identify on this piece of paper is something that we have a lien on, or that we're first in line kind of creditor for that asset should the person go bankrupt. So that's kind of the status of where we sit. I do see and think that long term, the blockchain is amazing, much better record keeping system for things like liens and keeping track of security interests and things like that. So it's kind of an exciting area to watch develop. That it's going to take many years, but one day we won't have the kind of maybe uncertainty or some of the vagueness about how Bitcoin used to be treated under these older regulations.
Yeah, certainly. So when you take a customer's cryptocurrency, what do you do with it? I assume you guys are putting it in cold storage somewhere, but are you, ever taking it out? Are you trying to find alternative revenue streams with the crypto? Are you worried about massive price swings in the case that someone defaults? So say the price of Bitcoin goes to zero, or something maybe not zero but significantly lower. How would that affect your business, and how have you hedged against something like that?
So yeah, first it's most important to really guarantee security of the collateral and give clients as much transparency and assuredness about the status of their collateral. It still is their property. It's just something we have some rights to. But again, part of the transaction here is that they're not having to sell it. It still remains theirs for the duration of the loan, and after the loan, assuming it's paid. So for every loan that we issue, there's a unique address created for that loan, and the collateral gets deposited to that address. It is a multi-signature address. All the keys to that address are held in cold storage in multiple geographic locations, and so we don't do anything like rehypothecating or relending out the collateral or anything like that. Possibly someday that could be an option for us, but just not today. And sorry, what was maybe the second part of your question?
Yeah, so as far as finding alternate, so if the price of the asset
That's
goes
right.
low enough to the point where, say, I take out a loan for $1 million when Bitcoin was $20,000 back in December, why would I not just default on the loan, and if it went down to $200 a coin,
Yeah, so
and not want my asset
risk
to? Yeah.
management and hedging
Yep.
and that stuff. Yeah, so we do have a margin call policy, and part of any
Okay.
loan we give, that there's a certain set of limits and kind of cure period, say, for our clients that kind of come through on a margin call. So when we issue a loan, we give every loan we give for the most part, we loan up to 50% loan to value. That's equivalent to the inverse of that is a 200% collateral to principal ratio. And so if there's a price decline, we'll send out notifications as that ratio worsens, and there's a margin call that gets issued at 150% collateral to principal ratio, which is the same as a 25% price drop from whenever we issue the loan. At that time, clients have 2 days to post more collateral, or we may declare the loan default. We make every effort to contact clients. We email, we'll even telegram them, or we'll text and call. So we have so far never had to sell or liquidate anyone's collateral
That's good.
without their consent. And so that's basically what happens as for our margin call. And then if things decline further, we do get to just liquidate things at 110% That's sort of in our contracts, and that's the kind of floor at which we'll liquidate everything to cover principal and outstanding interest. But again, so far, no loans have had to hit that, as everyone's been responsive, and no one really wants to sell their Bitcoin or see it get sold out from under them.
Yeah. Yeah. Okay. No, that certainly makes sense. So I read a little bit on your Twitter that you guys had announced working with Trezor potentially. So what are you guys doing with them, and how do they factor into your business?
Yes, we don't have a necessarily direct relationship or a business
Hmm.
development relationship with them, but we recently released a, I guess really back in March, we released a open source, Ethereum contract for doing multi-signature storage of Ethereum
Hmm.
within a contract. As maybe many are aware, last year there was issues with several of these multi-sig contracts in Ethereum that had just funds stolen or frozen. And so
Yeah.
while it was really important to us in accepting Ethereum as collateral, we still wanted to have a cold storage multi-sig be part of the solution. We just weren't comfortable using most of the contracts that were out there. So we wrote our own. It's very simple. It's had an audit done by Hosho, and we've had a bug bounty on it for several months. But key for us was having that support Trezor as a hardware wallet choice for folks. And so we released the contract and a DApp that's associated with it, so folks can kind of create their own contracts or their own vaults if they would like, and utilize Trezors for storing their keys.
So do you foresee moving to clients with fewer assets, so smaller loans? I guess what would you say is the average loan taken out now, and are you interested in going towards, the more consumer market for people who aren't putting, who aren't, I guess, accredited investor types?
No, I'd say, yeah, definitely our average loan sizes are in the six figures. And we do probably intend to keep that there at least, and grow those loans over time. I think just the way we're set up, we do give very good personal service to folks, and have a phone number that clients can call, and have an active client services team. And so a lot of that sort of pairs better with larger loan sizes than perhaps necessarily doing loans of $1,000 or $2,000 at a time. There
Yeah.
are, I think, other good solutions in the market for folks that would like that.
And so I would assume that there are only so many people domestically who have, six figures in crypto who want to take out a loan. So have you been looking into international markets, trying to target some of these people? How are you going about finding your customers? And is that something that's easy to do? Are they coming to you? Are you putting a lot of time into marketing? How does that work?
Yeah, so I'd say most of our clients so far have really found us just by coming through inbound or through word of mouth. When we launched late last year, we were really the first lender to be actively lending across at least 24 states. The first lender to get a license to lend in California. And so we just kind of been pretty well established, I think, just as far as coming out the gate as really the first folks doing this actively, and in reality, instead of just maybe doing an ICO or something. So I think, just been able to use that reputation, or have that reputation help us put a good face forward in the market for folks to come. We have talked to some international clients. We do have a few that are in Europe, but not very many. You would like to take our time and make sure we research whatever jurisdiction borrowers are in, and make sure that we can be compliant for any loans we might issue to them. And so that we do have, for instance, a larger minimum loan size for international clients. That's $100,000 versus domestically in most states our minimum loan size is $10,000.
Minimum, okay, 10,000. Yeah, that's a pretty reasonable amount, I think. So do you think there will ever be a move to sort of blockchain credit scores and more loans taking place within cryptocurrencies? Especially one thing I've always been curious about is peer-to-peer lending, to see if, that could ever be the case where you remove the centralization completely and allow people to conduct these processes amongst themselves. So do you see there always being a middleman for loans, or a company, specific to lending, or do you think someday people will decentralize a lot of these processes?
Yeah, I think there's always a push and pull, and a a decentralization and then a re-centralization that kind of occurs with
Yeah.
these kinds of assets. You saw it really in the last even 10 years with online lenders, as you had Lending Club and Lending Tree, and a lot of these folks
Yeah.
come online really with this promise of trying to be a peer-to-peer lender. But as they grow and as they scale, you really kind of start to find is that if your demands are such that you need to put $100 million to work in a quarter, out to loans, it's really hard to find the million plus investors you need at the, what is that, just $100, or the the 500,000 investors you need at if that's $20,000 per investor. I would need to just scribble the math out real quick, but
Yeah, sure.
it's too hard. It's a real scale challenge to find that many people for low dollar amounts that help you scale. And so these bigger lenders, and if you look at who's buying loans or who provides the capital inside a lending club kind of ecosystem, it's majority institutions or hedge funds that might be organized to put in by now billions of dollars towards these consumer loans that are originated on these platforms. So that's something we kind of observed early. I think there is still room, and there's always going to be the potential, and there should be, for individuals and folks to kind of participate in these loans and find good platforms that they can can be a lender, say, or have a portion of loans that get outstanding. But if you're a loan originator and you're thinking about scale, you're thinking about how to get your money in bulk,
Yeah.
and you might find it usually to be cheaper that way too, because that's folks that have like $100 million or say to deploy inside of lenders or lending facilities. Their acceptable interest rates might be lower, just because it can be harder to find good rates of return at that size.
Yeah, yeah. So do you worry? I mean, you talked a little bit about central banking and just banking in general. So do you think some bigger institutions are going to start moving into crypto? Do you worry about banks coming in and trying to do something similar? Or do you think they're going to stay away for a time?
I think, based on our experience talking to lenders, and many times which are banks and folks that we
Hmm.
talk to be a partner for lending through us. They're still so nervous and skeptical, or just unsure about the space and
Yeah,
the asset class, that I think that we're still many months, if not still years, away from a bank trying to do this directly. I think you'd probably see some banks work with folks like us before they would dive in and try to do it themselves. I think you also have real marketing challenges there, as if you're this big banking brand, and then you suddenly want to put on a face towards diehard Bitcoin OGs or something like that.
yeah,
I don't necessarily have the best easiest time winning those folks as customers.
yeah. Well, one industry that kind of comes to mind for me is miners, because a lot of miners want to
Hmm.
maintain liquidity within their assets to scale, even if they have a mining company. So that seems like an interesting, because I think that is one big problem within the industry that you're trying to address, is just the liquidity. When prices go down, people don't want to sell, and you have cash flow problems in all of these businesses that I've certainly seen firsthand. Do you think, well, so are there any other crypto companies, I guess, that you see doing something that you think is really exciting or special? Are there certain coins that you personally keep an eye on? How active are you in the market aside from being a part of the company?
Yeah, and to your first point, just briefly, a
Yep.
miner was our very first customer,
Really?
and so we definitely see good demand, pretty consistently from miners who might be building up their stash or their assets rather than just selling them all the time. And then, yeah, as far as what else excites me in the crypto ecosystem, I'm a fan of the various activities and things that are happening on top of Bitcoin. I think the Lightning Network is exciting. There's a lot of uncertainty and things to be figured out about it, but watching things like that Satoshi's Plates and some of the other apps that are coming out on top of it are pretty neat, and show I think really that advantage of going towards layer two type solutions. Um, Obviously Ethereum is also pretty fascinating for its own kind of capabilities and its own challenge that it has to solve over the next couple of years. I have enjoyed looking at Dharma, the Dharma protocol, which is, I believe, mostly built on Ethereum today, and
Hmm.
it's very related to our business as a kind of loan marketplace, so to speak, and so there's a lot of parallels and things to be learned, kind of watching them execute and what they do. And let me think of kind of what other projects that excite me. It's so early in the
Yeah.
space, and it's gotten so far kind of out over its skis and so much in terms of just all evaluations and
Yeah.
the number of tokens that are worth $100 million or so. It's just um, I think I try to have a way more tempered view of things, I suppose.
Yeah. So you think there'll be more of a consolidation before we see it taken more mainstream? And I guess one question I would like to ask is, I think I'm assuming you're coming more from a financial background, but you do have a lot of tech background as well, and that's similar to my experience. Do you see sort of this push and pull between the finance sector and the tech sectors as to the direction of crypto and which industry it really fits in?
Hmm. I think yeah, I think there's I mean, just picking up on that point, that there is, I think that's one of the things that a lot of the people missed early on with the idea of it's about the blockchain technology, not necessarily perhaps the Bitcoin. Is that money kind of has its own center of gravity in it, and insofar as Bitcoin has been able to become valuable, and some of these other cryptocurrencies have become valuable, they start to create their own, like, yeah, the best way I can put it is gravity, and gravity kind of within the social sphere, as people like flies to something sweet, or moss to a flame kind of a thing.
Yeah.
It sort of draws people in, and people maybe miss that, like, hey, there's actually a market there that's actually people with what is effectively money now, which is just in the form of
Yeah.
Bitcoin, and that becomes its own valid customer segment, its own client population. And so then now you switch to, okay, well, you put the finance mode, or the financial minded person and marketing minded person. You put those thoughts forward, and you think about, well, what kind of products can I build for those people, and what is the market sizing there, and how can this segment be better served where it's just not today. And then by doing that, you have to then go back and put your technology hat on, because this technology still is new, and you have to figure out things like, how is this stuff going to be kept safely? How are you going to talk to blockchains? What do you want to have actually execute on a blockchain in a smart contract versus just have done on a centralized server somewhere? And you're trying to really manage kind of an integration with this public blockchain ecosystem, versus just trying to take some code and implement it inside of an organization or an enterprise that's really kind of going to where the capital is and the customer base is, versus trying to just copy it from outside in.
Yeah. And I think, education has been one of the most important things within this industry, and it's something a lot of companies have struggled with. So, reading through your blog, I really enjoyed a lot of the articles. How did you guys decide to utilize certain education and I guess news and certain other things? So one reason we started our own news site, our own news app, and we did that just because a lot of the articles coming out we noticed were written by people who really didn't know what they were talking about, and there was a lot of blatant misinformation. You had some hedge funds trying to bid up Bitcoin Cash, and there were a lot of pump and dump schemes. So how did you guys approach, I guess, the outreach and education portion of your business?
Yeah, I guess we thought about just trying to put out really something authentic. I mean, it being a space that is so full of honestly, scams, outright lies,
Yeah.
real overpromising, and really taking advantage of people's natural inclinations to look for good opportunities and look for ways to turn this magic internet money that has gone from pennies per Bitcoin
Sure.
to whatever it is today, and then trying to reinvest that in other things that can also have, maybe give them back a return. There's just so much so much poor ethics out there, so that really to try to put out good, sane content that's well informed, that also shows off perhaps some of our more technical chops, and that speaks to this audience that we're really trying to go for, which are the real long-term holders out there that believe in this stuff and are in it for the right reasons, and potentially have a large capital base, and the desire to use that for other things, using dollars for those purposes, that just really aligns with kind of having good content and also just rather than investor time and trying to do a token or market that or just sell people on something, we figure it's just better to put out content that is good and people can evaluate for themselves on whether they think we're full of crap or not.
Yeah, yeah. No, I think you guys have done a great job with that. I really enjoyed reading through your articles. So,
Thanks.
just to sort of, I guess, wrap things up a little bit, if you had one investment you were going to make in crypto, where would you go now? Do you think the place to be is mining? Do you think you would just buy a coin and hold it? Are you someone who thinks that day trading is a good idea? What would be your general investment strategies if you were just going to throw one out there?
Hmm. I mean, I'm biased, but I do really believe that the crypto-backed loan market is you're really poised for a lot of growth here. I think there's it's not crazy to believe there's going to be hundreds of millions of dollars worth of US dollars that's outstanding in loans that
Mm-hmm.
are secured by cryptocurrency within
Yeah.
just a few years. So it's definitely a space to watch, and I think it's one of the ways that you'll see a lot of traditional finance, I think, kind of just being pulled in to this ecosystem, almost kicking and dragging. It's just hey, these rates are too good, and these loans are so low risk for the return, perhaps that's going to really help kind of mature the ecosystem and bring other players to the table. So that's just one area I'm biased, and I
Yeah.
think there's a lot of other more obvious stories out there, whether it's the institutions coming because of custody or these other avenues and things that are being tried. That those are also interesting, of course, too. But I think that still lending it's got a lot of legs.
And quickly to tack on to that, how did you guys approach the fundraising situation? Did you guys go the VC route? Did you bootstrap? How did you? Because so many crypto companies, they have a range of options. So I'm just curious what you picked and why you decided to do it that way.
Sure. So, with Drew's and my background through Infochimps, we were familiar with venture capital and fundraising through more traditional startup technology type means, and so that's the kind of route we were biased towards in the beginning, and but we knew we also didn't want to go through that route until we had good traction and really kind of demonstrated that there's a market here and that we have
Mm-hmm.
a solution for it. So that we did bootstrap for much of last year. We raised some small amounts of money from like friends and family on seed notes, convertible notes, and then we did a price round, did our Series Seed round that we closed actually last month for just about $2.5 million of new money. So with that under our belts, it just gives us a good foundation for maintaining our engineering efforts and continuing and growing to scale the business. On the lending capital side, that's been its own journey and challenge of finding folks who are comfortable in the asset class, comfortable lending against it at the rates we're talking about. And it's really kind of a process of just working your way up the food chain from small individuals or high net worth investors to credit funds to eventually banks and bigger institutions. And that's just sort of what that ladder looks like for us.
Yeah, I think it's really smart to make sure you get some traction before you approach the fundraising rounds because you see a lot of crypto companies trying to go in and essentially raise funds more like Kickstarter than an actual VC or startup roadmap. So
Yeah,
you
and it gives you
should.
so much negotiating leverage, and it actually creates almost a sense of FOMO in the
Yeah.
investors' mindsets
Oh, yeah.
much more and much more effectively than raising on some slide deck or token promises.
Yeah, yeah. They all want to get into it, but there's a lot of sketchy teams, a lot of people who really don't know what they're doing, and it's been scary to me just to talk to these companies that seem so legitimate on the outside and only come in to realize it's three guys and they
Hmm.
really have no idea what they're doing. So
Hmm.
it's certainly something I've noticed, and that's one of the reasons we tried to put together this podcast so that we could talk to people and people could hear from the founders themselves and make that decision on their own. And I really appreciate you coming on to talk to talk to us about this. Is there anything you wanted to close with? Any links or anything you wanted to direct people towards?
Awesome. Yeah, thanks, Mark. Been a pleasure. Glad to be here. If folks are interested in leveraging their Bitcoin or Ethereum and putting those assets to work through a secured loan, we'd love for them to stop by. We're at Unchained-capital.com. Should be able to sign up for an account or request an invite, and well, our client service team will be glad to take care of you and um, help you get a loan through us.
Awesome. Well, thank you so much for being here, and thank you guys for listening. We'll be back soon with another episode. Stay tuned. Thanks, Joseph.
Yeah, you bet.